Welcome back. Welcome back to Wednesday, March 4th, 2026. We don't have that many stocks reporting today, but we do have enough for us to go over. Take a look at the deep dive, find a few good candidates, and then maybe we'll see if we place a strangle or anything. But without further ado, we will get right into it and take a look at the deep dive. Hopefully people watched yesterday and heard us talk about a lot of those stocks were good earnings stocks to fade. Not a lot of really good earnings movers this morning. I think Rost was like the only good one, but I don't even think it hit 10% up. If you took Fortinet calls with me, FTNT calls in sympathy with CrowdStrike, then maybe you did pretty well. I think I made just a little bit, not anything crazy, but CrowdStrike was obviously up. But yeah, not much else to talk about from yesterday. Today is kind of the same day, not really a ton of great options, but there are still some out there. So we'll take a look at everything reporting, or everything at least that is on the deep dive, and then see if maybe we can make a decision on something. Wix was the only 10% mover from yesterday that we kind of touched on. I had a 90 call that I sold, I think when it was about like 84, 85 bucks. So I made like 100, like 130, 140 off of that. Just enough to wash my strangle with Wix. I was kind of looking for a much bigger move, but regardless, we move on. So the first one this afternoon that we have reporting is Okta, kind of a cloud-based cybersecurity company. I don't know if I'd put them in the same category as CrowdStrike. I guess they're adjacent, but I don't know if they're direct competitors. Either way, Okta has always been a pretty good stock to trade, even outside of earnings. Pretty good narrative intel. There is potential for Okta to pop. And like we say in the narrative intel, cyber has been weak. So if we do get clean guidance from Okta, good numbers, we can definitely get a good gap up. You could take a look at the 90-day chart for Okta. It has been kind of sliding since about like early December. But either way, we'll take a look at what we're pulling up for the strikes. We got the 80 call about 10.5% out of the money. The 60p 17% out of the money. The 60p, this setup, as you guys know, the cheaper the contract, and if we see a ton of volume over open interest, we can pretty much guess that these are sold puts. So I would imagine that traders are kind of lightly sprinkling calls on Okta, and then probably selling puts out of the money just to protect any downside, or any small downside, I should say. I don't think they expected to get to 60, but yeah, it's definitely, yeah, cyber has been definitely weak. Like CrowdStrike, right? CrowdStrike, I don't really know exactly what the numbers were, but CrowdStrike like was kind of very choppy right after the report yesterday, and then I think now it's up maybe like $7 or $8, nothing crazy. So something to keep in mind. Cyber has definitely been kind of weak this season or this quarter. How many moves has Okta made out of 8 quarters over 10%? So 4 quarters, Okta has moved over 10% up or down. I wouldn't say it's a necessarily strong stock to trade on earnings. I wouldn't force anything into Okta. If you have conviction on Okta, then don't let me stop you from trading it. But to me, it's not something that really stands out as a strong earnings play, regardless. Okta is definitely an option, but it's not one that I would say it's a must play, right? It's not a MongoDB, it's not Credo or anything like that. But there's potential. There's potential. So like I said, if you have conviction, don't let me scare you away. And for anyone watching, if you guys want me to look at one of these stocks that I might not spend a lot of time on, please let me know in the chat. If you have any questions or just want to bounce ideas off of me, let me know. Don't hesitate to throw stuff in there. Next one that we have, American Eagle, so AEO, the good old Sydney Sweeney stock. I don't really like, I mean, as you guys know, if you've watched these, I don't like the cheaper share prices, because a 10% move off of this is really not that much. It's just a couple of bucks. And American Eagle, I want to say it's this number 3 out of 8 moves over 10%. I want to say that number has only gotten better based on the past 2 quarters. The past 2 quarters, I think American Eagle has made good moves. I think one of the quarters was the direct Sydney Sweeney kind of like catalyst move, and then the quarter after, I don't know if it went up or down, but either way, this 3 out of 8, this is a bias from, this is a recency bias. Only the past few quarters has it made meaningful moves. Before, it really hadn't done anything. Traders are obviously looking at American Eagle again. I haven't seen anything from Sydney Sweeney and Jeans lately, so I don't know if that marketing campaign is done, or if the allure is still there, or whatever that was. But regardless, here are the strikes that we're pulling up on the website. So you can see they're really close to the money. 23 call, only like up 1% out of the money. The 22p, just 3% out of the money. So a very tight strangle on AEO. This tells me that people aren't really expecting a huge move, but they are definitely betting on either side. These contract prices, really hard to tell if they're bought or sold. I would say it's definitely a combination. But I don't focus on American Eagle outside of earnings. I haven't really traded it on earnings ever, just because the share price kind of shies me away. But from what we can see from other traders doing, it definitely looks like people are not expecting a huge move from American Eagle. Narrative intel on American Eagle is not really great. It's another one of those consumer grinders. I think we had one of those yesterday. And it didn't really do much. I don't know if it was A&F or another one. I think A&F actually had a pretty good narrative intel. But one of the consumers we looked at yesterday was one of these consumer grinders. And they don't really do that well off of earnings reports. So AEO, I would probably suggest against. But again, if you have conviction, do not let me scare you off. I'm just the messenger showing us the data. That's my job here. All right, we'll look at Broadcom. So AVGO, this is a good one to look at because it is a very popular stock, and it is one that could, I wouldn't say carry the market, but if Broadcom moves big one way or the other tomorrow morning, I do think that you're going to see the macro market go the same way. So Broadcom goes up or green, I do think the macro market is going to match that, or red, vice versa, same thing. Broadcom, only 4 out of the last 8 quarters, it's gone up or down 10%. Good share price, right? A 10% move off of 318, or we'll just round it up and say $320. That's a $32 move either direction. I would imagine the contracts are pretty juiced. Like I would imagine the 350 call is pretty juiced, and probably the 290 or the 295p are pretty juiced too. And I wouldn't say this is a stock that you could force into, right? Only 4 moves out of 8 last quarter, the 8 last quarters. It's not one that you want to force. But again, if you have conviction, it's definitely one that could move given the right environment. Great narrative intel on AVGO, semis and that kind of thing. Like we say here, if AI networking and software margins guide up, this can definitely drag the whole AI infrastructure complex up too. So like I said earlier, if AVGO or Broadcom goes green tomorrow, you're going to see a lot of AI related stocks go green too. If it goes red, you'll also see them go red, I think, as well. So it's definitely one that can kind of move that whole sector. These strike prices are pretty interesting to me. The 360, like I said, like we were saying, the 30% up, 350, 360. This looks like they're sold for sure. That 360 call coming in at like $1.25. 14,000 contracts traded today, bought or sold, over 11,000 that were just chilling there on the OI. I definitely would imagine the majority of those are sold. And the 300p is interesting here to me. This is a lot of volume over open interest for kind of a pricier contract. And it's within 10% of the current price. So I would lean to the put side here without even looking at the contract charts, what those candles look like in the SMAs. I would say right off the bat that this is kind of more of a bearish strangle, or a bearish leaning strangle. It's not something that I'm going to jump into. I might not even play any earnings today, just because I myself am just a very conservative minded trader. But as you guys know, if you don't make money if you don't play, right? So you got to risk it for the biscuit sometimes. And if you're going to risk it for the biscuit, buying the 300p for AVGO might be a good play for you. So is this one that I would strangle? I don't think I would strangle AVGO in this case. I think if you're going to trade something like this that has 4 moves out of 8, I think you're okay just leaning into one side. And if that side works, great. If it doesn't, then at least you didn't spend twice the amount on the other side. So AV Go, not really a must play, but definitely one of the better options that's reporting today. I'm going to turn it down, sell it. So as far as selling, I personally like to sell every half hour. So 10 o'clock a.m. Eastern is my first window for selling. 10:30, 11, 11:30, 12. By 12 p.m., I really like to be out of all of my earnings plays. If I'm green, I take that green right away. My lizard brain sees green and goes, I need to take that profit. And spoiler alert, I often sell very early, but at least we make money, right? Profit is the name of the game. I will talk about Vive. I got bad news. For some reason, I guess I thought Vive was last week, so I don't have Vive on this list, but I did look it up before I got on. So it's got 2 moves out of the last 8 quarters over 10% up or down. Last quarter, it had a 9% down move, so that's pretty close. So you could even say that Vive has 3 moves out of the last 8 quarters up or down 10%. I was just looking at the contract chain or the options chain here. I like the 220 call for Vive, and I would probably pair that with like a 160p. I do think the call side looks better for Vive. That's VEE Vive, Viva Healthcare. It's a healthcare stock. I don't think it's one that you want to strangle. So if you are going to play Vive, I think you're okay just playing one side. And the side that I like there is the 220 call. But unfortunately, I don't really have narrative intel for you or anything this time. Moving on, we'll look at Cracker Barrel. Cracker Barrel, with their awful, terrible logo rebrand. What was it, like 2 quarters ago? It's definitely in traders' minds. I don't know why it's in traders' minds. I mean, we can look at the data here and we can see it's a cheaper share price, right? A $30 stock is a $3 move up or down. It does have a pretty decent expected move, but whatever. We don't really care about that. Only 1 quarter out of the last 8. So 1 quarter out of the last 2 years, Cracker Barrel made a 10% up or down move. And it was that the one that it was that 10%. It was the move or the quarter right after they rebranded. Well, I think that what they did is like maybe 2 weeks before earnings or 2 or 3 weeks. I don't know how close it was, but I remember it was really close. They came out with this god awful looking logo. It got a ton of backlash, obviously, as you guys know. And then right before earnings, I think they came out and said, "Oh, like JK, we're gonna go back to the old logo." But traders and investors hated that, therefore the stock sank. So I did trade it that quarter just because there was a little bit of that catalyst. There was a little bit of that weird logo kind of narrative, but totally off my radar now. Not really a great narrative intel. It's one of those consumer grinder stocks. So if it does get good or bad news, I don't really see it moving more than 10% up or down. News meaning numbers or forward guidance. I don't like these strikes that we're pulling up. The 35 calls is pretty too far out of the money for me. The 25p is, again, too far out of the money. And these definitely look like they're being sold. These are sold positions to me, they look like. So I'm off of Cracker Barrel. I have no interest. And I would suggest the same for anyone else that's just kind of if you watch these streams and you just want to find like literally the best opportunities, that's what the whole goal of the stream is. And I would say Cracker Barrel, scratch that or cross that off your list. Don't even look at it anymore. ChargePoint, obviously kind of involved in like EV charging and that kind of thing. Them and EV Go kind of do the same thing. They have those like little Tesla charger stations. They're not Tesla, obviously, they're ChargePoint, but you get the drift. You know what I mean? Kind of a cheaper share price, $6.50, almost $7 a share price. So a 10% move is not anything big at all. Half the time it's able to move up or down 10%, but again, a 10% move off of stock like this is not really anything crazy. If you're going to trade something like ChargePoint and that cheap of a share price, I would suggest getting something in the money, or getting something very, very cheap and just literally throwing it out as a lotto. I would avoid it. If you are a big EV kind of person and you are all about this sector and this space and you want to trade it, don't let me tell you anything otherwise. But I would suggest getting something closer to or in the money. And make sure you get long dated. If you're going to do that, get something like March 20th. Get one of the monthly or the OPEX. Not the best narrative intel for ChargePoint. So immediately that makes me skittish, makes me shy away from it. And really, like with these strike prices that we're pulling up, nothing really sexy about this at all. This does not look good to me. I don't like any of these. The 7 calls pretty close to the current price, right? But it's really cheap. There's not a lot of volume. There wasn't even a ton of open interest before the volume came in today. And then on the other side, that 650p, like that, nothing about this excites me. I appreciate it, Floor. I appreciate it. Nothing about this triangle excites me at all. So I'm off of ChargePoint. I don't really like it. But if you're into the EV kind of stuff, like I always say, don't let me dissuade you from anything. PagSeguro. Don't really know much about this company, although I think like seasoned traders do know about it. Maybe it's been around for a while. Brazil, like a Brazilian company, financial, so like a Brazil fintech company, which I think is the first time I've ever said that sentence in my whole life. But that's what PagSeguro is. Not let's see. We're not even pulling in a narrative intel for Pags. We'll look at the strikes just to do it, just for the fun of it. But I would not recommend this stock at all on earnings. I put together the data just because I do, but I don't like these. I don't like anything we're pulling up with the strikes or anything. I think the 11 call is like closer to the current price, which is okay. The 9p is way too far out of the money. So it looks like PagSeguro traders are maybe going very close to the money on the call side, and then selling the puts that are too far out of the money. But I would suggest avoiding PAGs, so we'll move on from that. Nothing really cool there. BBAR, an Argentinian bank or Argentina fintech. I'm not even going to look at that. I don't like the share price. I kind of lump it in the same category as PAGs. I think if you're playing one of those, you're just forcing it. I would avoid them. I would just ignore them altogether. We'll look at Rigetti. So Rigetti, obviously, as you guys know, if you trade earnings or if you just trade stocks in general, I think you know of Rigetti. It's a quantum computing company. So I think we had D-Wave report very recently. We had IonQ report very recently. I don't know exactly what their specific numbers were. I think a lot of these quantum companies are too. I think that they might be a good forward investment, right? They might be good in the future, but I think it's a little too early for quantum. I don't really think they're making a lot of money off of anything quantum related right now, or that much. It's a very cheap share price. Rigetti used to trade close to like $40 or that close to that. You can see in December it was about $30 a share, maybe like 26 or so. And it's kind of bled since then. Only 1/4 out of the last 8, it's made a good 10% move up or down. The one thing I know from Rigetti, I don't know why I know this, but if you Google Rigetti headquarters, first of all, their headquarters is like a really weird looking building. And the only picture that they have of it is they have a living plant wall in the letters of Rigetti. So that to me just screams like what are you doing? Like that I just don't. I'm so bearish on this company and quantum short term in general, that it's just so hard for me to wrap my head around something positive for Rigetti. But regardless, put together the data and look at it. Not great narrative intel. The fund, like I said, like we say in the narrative intel, we have thin fundamentals and a thin narrative. Any progress language, it can rip up or dump. But I don't think it's going to make a big or a meaningful move anyways. So I would suggest avoiding it. I don't even think I would play like a sympathy play or anything. I think if you are stock minded and you're investor minded, definitely take a look or listen to the earnings call for Rigetti and kind of do your due diligence on the rest of the quantum sector, because these could be good stocks to pick up for future holds. They could be good long term. So QBTS, QUBT I think is one. IonQ, Rigetti. So all those quantum names definitely worth keeping an eye on, but I don't think that they are good candidates for earnings plays quite yet. As far as the strikes that we're pulling up, so the 20 call and the 17 and a half P, the 17 and a half P looks like what traders are leaning on more because it's a little closer to the money. So to me, this looks like a bearish strangle off the bat. But I wouldn't force it. I would avoid Rigetti, and as such, I am fading it myself. StubHub. So StubHub doesn't have that many quarters under its belt. So this one move out of 8, I want to say maybe they only have 3 or 4 quarters to report, or they've reported 3 quarters thus far. So this really should be like 1 move out of 4 or 1 move out of 3. Regardless, like a 1 out of 4, 25% chance, or a 1 out of 3, a 33% chance. Not really big enough for me to get in or to safely play. The whole goal of this website and these streams are to put ourselves into situations or positive setups that are good for us, right? That's all trading is. You want to put yourself in the best possible situation. And if it works, it works. You followed your strategy and you put yourself in the best setup and it worked. If it doesn't, you can't really be mad at it. You can only be mad at stuff when you force it or when you go against your plan or you go against your strategy or something like that. StubHub would be definitely going against a strategy, I think. I would avoid it. It doesn't really have great narrative intel. Strikes that we're pulling up. That's a big volume over open interest number. 11,000 contracts bought or sold on the 850p over almost like 825 that were just chilling there. I definitely think these look like they're sold, especially that amount. But if someone knows something I don't know and they're buying that many contracts, 15.5% out of the money, maybe StubHub is tanking. I don't know. Maybe Ticketmaster is like taking over that space. I'm not quite sure, but this to me looks like they're sold. I don't think it looks like any sus insider knowledge or anything like that. So I don't think traders are expecting a huge move from Stub. And therefore, I think that they're selling that 8.550 or that 850 put out of the money, 15% out of the money. Webull. So Webull is going to be a popular name. Every trader that if you trade, you know about Webull because it is kind of like a trading platform. I don't use Webull. I use a combination of Thinkorswim and Schwab. Just kind of more old school. I don't like Robinhood. I don't use Robinhood. But that's just me, and that's just what I'm used to. Webull, super cheap share price. No moves out of the last 8 quarters over 10% up or down. So immediately, if I see a 0 out of 8, I move on, to be honest. I don't even look at it anymore, but we will look at it for the sake of the stream. Narrative intel, not really great. Nothing going on there. Strike prices, ton of volume over open interest for the 650 call. And this is really cheap. This could definitely be a combination of bought and sold, but I don't really care just because I'm not really interested in it. I would say these 650s, I would say this amount and this price, they're likely sold. So I would think Webull probably makes like a small move down. I don't think it's really going to hit higher than like 750 probably after earnings, even if it has good numbers. We'll skip the rest of these just because we only have a few minutes left and I want to touch on every one of them. There's a few decent ones tomorrow morning, so we'll look at those, maybe bounce around a little bit. Sienna is one that makes the top candidates for this week. I liked it earlier on in the week. I don't really know if I like it a ton now. It's close to all-time highs. Anything that's close to all-time highs, remember, a trend in motion is much more likely to continue than reverse. So don't ever try to short tops. If something is at an all-time high, most likely it's going to continue, then go the other way. So right off the bat, I would just say up for Sienna. And I bet up on it for earnings pick'em. So that's just my thoughts. Pretty decent narrative intel here. So this is kind of a sleeper re-rate stock. If like we say in the narrative intel, if they frame AI and data center connect, if they see demand in data centers and AI and that kind of thing improving, this one can definitely gap up. And being close to all-time highs, that's just kind of like a wombo combo. nothing standing out. See this, and see this is going to push me off of it. I don't really see anything attractive about these strikes. The 460 call, 34% out of the money. These are definitely sold. And it's not even a ton of volume over open interest that's there. So I don't even like the closer to the money calls. The 317.50p, this looks like they're bought, but there's not really a ton of volume over the open interest. That open interest, 1,000 contracts just chilling there at about like $12. Maybe Sienna does go down, or at least that's what traders are thinking of. In my case, I already bet up on it for earnings pick'em, so I can't change. But if you are going to play Sienna, first of all, I would suggest not to play it. Nothing's really standing out to me personally, but it definitely looks like people are thinking of a smaller down move than anything up. Sienna, Burlington, so Burlington Coat Factory or Burlington Stores, a retailer, kind of similar to Ross. I would say they're similar to Ross stores. So Ross I think they had pretty good numbers and they gapped up today. It didn't hit quite close to a 10% move. But Burl is definitely an option in that same space. Pretty good narrative intel. It is one of the retail leaders, so the guides definitely tend to matter more than the numbers. That kind of speaks to the conference call for Burl. This is really interesting, actually. The 345 call, it's pretty far out of the money, 15% out of the money, but good number of volume over open interest. And the 285, it definitely looks like traders are strangling Burl. They're definitely doing something here. I don't really know exactly. I'll look at the 345 call right now just to kind of see what the contract chart looks like. If it looks spicy or anything. 345. Not good. I don't think it looks good. The 285p, that's probably what people are leaning on more. It's probably the 285p just because it's pricier and it's got more volume over open interest. That definitely looks a little bit better to me, but I wouldn't force this trade. I'm going to fade Burl. The 285p, 1,100 contracts over two that were just chilling there, that is pretty meaningful, but not something I would force because that's a pretty pricey contract. Burl, I wanted to look at Victoria's Secret. I want to look at Visco. So Victoria's Secret, everyone knows what Victoria's Secret is. $60 a share price, so 10% up, $6, 10% down, $6. 3 moves out of 8 quarters, it's made a good move, 10% up or down. Pretty decent narrative intel. And this is a really interesting strangle to me. It definitely looks like people are expecting some sort of move in Victoria's Secret. Both of these strike prices are about the same price, so it's kind of hard to say what side people are leaning to more. I want to look at the 55p really quick, and they're monthlies too. Monthlies we like because we have a lot of time to work with. I would lean to the downside on Visco for sure. This is definitely one. I want to say there was a quarter recently that it did make a pretty good move down. I don't think it was last quarter or the quarter before. I think it might have been like a little while ago, but I would definitely lean to the downside on VSCO. I like the 55p. It's within 10% of the current price. I like the volume over open interest. So I would lean here. Definitely looks like people are thinking about a down move for VSCO. So far, I would say the only one I really like is that VSCO strangle, leaning to the downside. I want to look at the Chinese stocks really quick. Billy, this is Chinese China's form of like YouTube. Really popular in like Gen Z crowd. Good narrative intel. It's a very cheap stock, about like $28 a share. So not really a huge move up or down. Nothing crazy with the volume over open interest. I don't like these contract prices. So I'm going to fade that. But I think it's going to be interesting to see how Billy moves tomorrow and what they say as far as their numbers. The other one, really quick, JD. That's the other China stock reporting. Not so much YouTube, but more just like e-commerce. Kind of like an Amazon-ish website. good narrative intel or pretty decent narrative intel for JD. I would fade it. I don't like it's the same kind of thing as Billy, same setup. I think you're forcing it if you're trading this. I think the better trade on something like JD or Billy would be the day after. So trading the momentum the day after, I think, is the way to go on those. So just because that's pretty much it, we're at about like 4 p.m. Eastern. I will call it quits there. I'd say VSCO is the only one I really like to the downside today. I hope Broadcom does something crazy either way, just because that's going to actually move the rest of the market. I kind of feel like the market has been a little sideways, a little choppy as of late. So I want to see some volatility come back in. But either way, we will. I'll see you tomorrow at about the same time. I'll try to jump on a little earlier. I'm still trying to get the timing right on all this. So bear with me while I do that. But I appreciate everyone for watching. I appreciate everyone for liking the video and subscribing to the YouTube account. We're only going to get bigger and better from here, and we're all going to make money in the best earning setups that we can this quarter. And then just wait for next quarter. It's going to get even crazier next quarter. You don't even know what we have up our sleeves. So hope you all enjoyed the stream. Like and subscribe, and drop me a comment if you have any suggestions for what I can do differently. Technically with the website, in these streams, anything I can focus on more, I welcome any and all feedback. Best of luck. Hope you guys make money tomorrow.